This is what most traders' charts look like. Lines everywhere, no idea which ones actually matter, and then they wonder why price blows right through their support or resistance levels. Now this is mine. You can see there's only a couple of lines, maybe 6 or 8 max. My chart looks clean, and I only put these lines, which are called support and resistance, at crucial areas. What do I mean by crucial areas? That means where this level got tested a lot. Now, the thing with traders, why they say maybe support and resistance doesn't work, it's not about support and resistance that doesn't work. It's actually their system, their strategy that doesn't work. What they do is basically they go to a lower time frame, they start putting these zones, support and resistance zones, and the price just blows right through them, and then they lose money and cry. Why? First of all, you're putting these zones in a lower time frame, which doesn't have that much information as a higher time frame. This is the first mistake. Second mistake is, as I said in the beginning of the video, is that they put these zones everywhere. Their charts are just like full of lines and they make it confusing, and then they lose money and cry about it. So here's the thing that I have a solution for, and what every actually pro trader does, it's not just me, I'm not perfect in this. It's what actually every pro trader does when I see their charts. It looks like this. It generally looks like this. Support resistance zones marked out clearly. Maybe they use 1 to 2 indicators. Now, of course, I don't only use support and resistance for just my confluence. I use another indicator called the SRSI, which we will talk about later. Now, let's focus on support and resistance and how do I draw them. Now, first of all, I zoom out. When you zoom out, you look at the bigger picture. When you look at the bigger picture, you know the structure of the market. Now, here I am in Ethereum. So for Ethereum, right now I am on the daily chart. I zoomed out. I started setting my zones. Let's say here, for example, at 2370. Price tested this zone a lot and rejected. What does it mean that it is resistance? Now, when price goes to that level and it rejects, that means there's no more buying power. That means sellers are in control and sellers are selling at that price because nobody wants to buy, let's say for example, Ethereum at a higher price. It's too overpriced at that level, for example at 2370 like here, so that's why it rejected and it went back down. It is all market psychology. So if we're here, basically went to that level, tested it a couple of times. Let's take this area here, tested it a couple of times. 1, 2, 3, 4. And that's the thing. It tested it on a daily time frame. That means each candle represents 1 day of trading volume. So that means this zone is actually very crucial and it is actually important. The second zone is the same. Tested it here, closed above it, and then rejected, went all the way down to that support here. So as you can see, for example, here, the zones that I'm actually marking are actually important. Bounced, and then here rejected, 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 and then this zone actually rejected. Now here's the thing with SR lines. I hate calling them SR lines because they're not just lines on like a specific price action. It is an area, it is a zone. Like for example here at 2370, it's not just that zone where you should short, for example. You should take it like, let's say for example here, all the way like that zone. Okay, so this zone is called a resistance zone. You can see here how this wick didn't go all the way to that 2370. No, it didn't. It went to 2350, rejected, and went back down. So it is a cold zone, and this is where people makes mistake a lot in the SR zones. Now after I actually lay them out, as I have them right here, I go to the 4 hour so I can take my entries. Now here's where things gets actually interesting. Because I have my zones drawn on a higher time frame, that means this zone is actually respected and strong. Now I need to enter a trade. As I said, I don't use only one confluence. I use, let's say, 2 other. For the sake of this video, I'm only going to use another confluence, another indicator, which is called the Stochastic RSI. Now, how does the Stochastic RSI actually work? So there are 2 territories in the Stochastic RSI. There's the oversold zone, where it is below 20. You can see this line here. It is below 20, where it is an oversold zone, like this one, like this one, like this one. This is called an oversold zone. Another zone, it is called an overbought zone. This is where buyers are over exhausted. They are exhausted and just price cannot move up more. It would be above 80. Now here's the thing. Price can stay at that zone for a long time. Like you can see here, it stayed in the overbought territory for like around 20 hours. And then it started curving to the downside. This is when price rejected and went back down. Now let's take this for example. Okay, this zone here for example. What happened here? I am on the 4 hour and let's say I wanna enter a trade. I see price is going up, okay? Went to that resistance zone here at 2269. Let's say, okay, let me check if this resistance zone is actually rejecting a lot or if price will close above it. I need confirmation. Now, you can see here how price closed above it. That means wait, don't enter until the next resistance zone, which is at 2370. So I actually entered at that zone at 2370, a short. Why? It's because first of all, SRSI, started to curve to the downside. At this point, it started to curve to the downside, plus it is right at resistance, so price is showing weakness and buyers are getting overexhausted. You can see here, yes, SRSI is overbought. However, price is still going up. Why? Maybe buyers are not exhausted. Plus, it got confirmed here that it actually closed on another 4 hour candle above support. Went all the way to the other resistance level. SRSI started to curve to the downside. Boom, boom, boom. Went all the way down. And I took this short and I made around 120%. That's a great risk reward ratio. Now let's take another example. Let me just turn these on. Boom. Okay. Let's take this other example here. As I said before, these zones, I marked them on a higher time frame. And then I went to the 4 hour and entered my trades. Now this zone, for example, 2200. SRSI is overbought. Okay? It is overbought, started rejecting, curving to the downside. Buyers are getting more exhausted. Boom. Price rejected, went back down. TP1 was around 2100, the next support. It didn't hold. TP2 was around here at 2000. That's another short that I took. So you can see here how when you add support resistance as confluence with the SRSI on the 4-hour, it makes more sense and makes things more clear. Now let's take a long example. Long, that means buy. Let's take this here. Price went to the support zone. It shouldn't like be perfect and go to that support line. No, as I said, support and resistance are zones, are areas of confluence where price rejected or bounced from. So when it went there, SRSI was oversold, boom, bounced, went back up. Now my TP1 was there, 2100, and I set my stop loss at break even. Because why? It is because the SRSI is overbought now, and I don't want to make it a risk trade. I want to make it a risk-free trade. And my next TP was around 2200, stop loss at break even around 2015. Boom, went back up, retested it again, retested that zone, become oversold again, and then went back up. Boom. To that next resistance zone at 2270. Now here's the thing. There you go. Resistance zone, SRSI is overbought, started curling to the downside, rejected, showed weakness, boom, went back down to that 2160. You would have taken profits right there. You would have made like 50% or 60%, depends on your margin and leverage. Boom, close the trade. And now you need to wait for the SRSI to reset, to go to the oversold territory, to actually look for trades. Now right now, on the live chart, on the current price action, if I want to take a trade, I would actually take a long. But not right now exactly. Now why I would take a long, it's basically, first of all, it is right at support. Price is right at support. It closed above that level, above 2200 on the 4-hour. Now I would wait for it to retest again, so the SRSI would actually curl a bit to the downside to make sure to have full confirmation. Take along, my first TP would be around this zone, not exactly at 2270, but around this zone, and my second TP would be around 2370. And there you go, you make money. So here's the thing, you don't need to actually make stuff complicated and use a lot of indicators and lines and just make your charts look complicated. The easier it is, the better, the more money you're gonna make. It doesn't matter how your chart looks like. It should be clean and precise. Because if it's not clean, if it's noisy, you're just gonna be lost. So, last thing I want to say is, most of you are going to watch this video, say that was fire, and then go back to doing the exact same thing you've been doing. Losing money, drawing random lines, wondering why nothing works. And that's fine, that's most people. But if you're the 1% that actually wants to build this system, execute with discipline, and stop gambling, I'm opening a few spots for mentorship. I work with you directly, your charts, your setups, your money on the line, and links is actually in the description. You can book a free call, a free 15-minute call to just discover what my mentorship program is, and we can set things up for you. Thank you guys for watching, and please, if you have any questions, please ask them in the comment section down below.